Hi, this is Steve from thegreshka.com. This video will show you what IV rank is, how it's derived, and how it's a more useful tool than using plain option IV as an indicator for spotting high IV options. IV rank. What is it and why do we care? IV rank is different from the normal options IV given to you on most broker platforms. IV rank is the current relation of implied volatility to the historical range of implied volatility of an asset or instrument. It ranges from 0 to 100, with 100 being the highest. As you know, volatility has to do with increased expectation that the underlying prices are moving beyond the normal range. This in turn increases the perceived risk of the market on the price of the instrument, and also the options. Hence, this allows sellers to be able to collect more premium as buffer for the instruments they are selling. Whether the perceived risk should be materialized or not is another matter. In simple terms, it directly affects the amount of premium we collect from selling options. It affects the amount that we pay buying options. Options that are higher in IV rank are more expensive, meaning more seller premium, thereby bettering the seller's overall risk-reward ratio. IV rank identifies how volatile an option really is compared to its normal volatility range. Since the number ranges from 0 to 100, we can simply make a cutoff that options with an IV rank of 50 and above are options with a high IV ranking. Options with IV rank below 50 are low IV ranking. Here's a short note on historical IV, which we will be using as IV range. Usually, your historical IV data is already provided for you on your broker platform. Computation may eventually vary depending on broker to broker, but mostly this has to do with the moving average of the last 30-day out of the money options. Based on how IV rank is defined, we can compute for IV rank using the following formula. Let's get our hands on a simple example of how IVR is computed. Say the last 4 historical IV data of a specific option chain are as follows: 20, 30, 50, and 80%. So what is the IVR if the current IV is at 30, like in situation 1? What if it's 50%? And what's the IVR if the current IV is 80? Applying the IV rank formula presented before, if IV is currently at 30, IV rank or IVR will be at 16.666%, or rounding it off, it will be 17. This is a low IV environment. In the second scenario, if IV is currently at 50%, our IV rank will be at 50% or 50. This will be classified as high or relatively high IV ranking. The third scenario shows that IV rank is at its highest. When IV is 80%, IV rank will show 100. IVR is relevant because it ultimately answers the question, is the IV higher than this stock or asset's normal IV activity? In terms of option pricing, this translates, is the option priced higher than it's usually priced? IV rank is key to answering which option strategy to use to take advantage of the pricing effect of options. Since options are priced at a premium when IV rank is high, it makes sense to sell options or have a net short strategy when IV rank is high. A net long strategy works more to your favor when IV rank is relatively low.